Legendary investor Mohnish Pabrai has invested 12% of his portfolio into the Constellation Software family. And this is a very interesting bet as Constellation Software stock is down 45% over the last year. That was one of those compounders that goes up and never goes down. It never had a drawdown of more than 15%, I believe, in its entirety since the company went public. But very recently, the stock has been going down around 47% from its highs, not due to the company deteriorating in fundamentals. In fact, they're still growing free cash flow 23, 24%, but it's mainly due to the AI sentiment, as Constellation Software has around a 94% correlation to IGV, which is a software-related ETF. And Mohnish Pabrai commented on Constellation, and he said Constellation Software is a very high-quality compounder founded by Mark Leonard. It operates a buy and build flywheel of vertical market software assets. And those are mainly softwares in niche industry, necessity industries, like maybe education or maybe government software or maybe things within healthcare and hospital. But they're very mission critical, like high failure rate. So if something fails, if something goes wrong, it could be detrimental to the underlying company. It's not like some kind of a website that edit images or make videos or whatever. Those are like critical stuff, mission critical stuff. And he said the recent AI driven sell-off in software has hammered these stocks. We believe Mr. Market is wrong, and AI will instead benefit incumbents like Constellation and its spin-offs, Topicus and Lumine. They will continue to compound for many years to come. And in this video, I'm not going to just talk about Constellation. I'm also going to talk a little bit about Topicus and Lumine, but mainly Topicus since a lot of you guys have asked me, and I'm going to talk about the stock and give you my opinion and mainly things around AI. So I really hope you enjoy it as always. Now, I have a lot of respect for Constellation Software because not many tech companies were able to compound free cash flow per share. They grew it by about 100 times, from $1.48 to $125 over the last 18 or 20 years without diluting a single share. If you look at the diluted shares outstanding, they were about 21, and they're still about 21. They haven't issued a single share. You really have to respect that in a world where a lot of companies are, you could say, fooling investors with massive stock-based compensation, all these kind of things. Well, this company has compounded free cash flow per share by, I believe, 27 or 28% on an annual basis. They grew it 100 times without diluting a single stock. That's really amazing. They have other qualities which I respect very much, which was the founder, Mark Leonard. He's unfortunately not the CEO anymore due to health reasons, which is also contributing to the sell-off. But his salary was zero. He has voluntarily refused to take a salary for the last, I believe, 7 or 8 years. And they have a culture where they don't have any stock-based compensation. So if you work at Google or Amazon, they give you stock-based compensation for, I don't know, mopping the floor or doing crazy things. Like if you do anything, you're going to get stock-based compensation. That's not the case with Constellation Software. With Constellation Software, you get a bonus, but 75% of the bonus must be used to buy stock in the open market, and you have to hold them for an average period of 4 years. Mark Leonard is big on making sure that the incentives of the directors and executive in general are aligned with the shareholders' incentives, not just them sitting around doing nothing and collecting a paycheck. If they want to maximize their paycheck, they have to make sure the stock is much, much higher in 3, 4, 5, or 6 or 7 years. So that's really, really important within the culture. Now, if you look at the latest report, the company has grown 15% in total for 2025. But out of the 15%, only 3% is organic, and the rest is mainly within acquisition. So the company does a lot of acquisitions, and this is how they were able to grow so much. They have organic growth, 2%, 3%, 4%, and then they do a lot of acquisitions, and they're really good at not overpaying for acquisitions, which is something that not a lot of people can do. Most people and most companies tend to overpay for them, but Constellation kind of does it the Warren Buffett way, and they don't really overpay for those acquisitions. And they also grew cash from operations 24%. And again, it's really funny when you look at the stock and you look at the numbers, and you don't see anything that matches. Now, looking at organic growth on a quarterly basis, and this is important because if AI was really disrupting and killing Constellation, the first thing you gotta notice is declining organic growth. This is the most important metric if you want to assess AI disruption. Well, in this case, it has been critical around 2%, 3%, 4%, which is good with the historical average. But what really matters is maintenance and recurring, because this is recurring revenues. Once Constellation acquires a company, they tend to pretty much throw away all the hardware and low margin revenues, and they focus on maintenance and high margin recurring maintenance related revenues. This one is still growing 6%. In fact, it re-accelerated from 4%. So AI is not disrupting the company yet, maybe in the future, but it hasn't been happening. Now, funny enough, that a lot of people don't know that Constellation Software itself owns a lot of AI-related companies. In this graph I showed you, there's a company called Topicus. Constellation Software owns about 34% of Topicus, which is a different publicly traded company. Now, Topicus has a business which was 100% developed organically called Akuro by Topicus, and they mainly focus on AI agentic banking. This is not just some kind of an old traditional software company. They're actually leading AI in many critical sectors, such as banking. And they said it themselves. They said banks don't need more software. They need a brain. And they developed this agentic banking operation, which has been very, very successful. And Akuro by Topicus has about $133 billion in assets under management. This is something that a lot of people don't know. But this is an example where the company is not sleeping on AI. They're using AI, developing AI tools, and they're going after the big players to take market share. And they have TD Bank as their customers for Akuro by Topicus as a banking platform for TD Bank. They're using agentic banking within the Akuro platform. And those are mission critical, highly dependent on data and personal and privacy information, and they're very, very sticky, and they're not going to go vibe code their own software. So this is something that a lot of people don't know, and it's really, really important. But then Constellation itself has like a venture fund where they just put on some gambles. They have Google. Google has something called Other Bets, and they gamble on space and gamble on all kind of things. Well, Constellation does the same thing on a lot of startups, and they have a lot of AI startups, such as this one, which is Raya, is an AI startup. They have another one called Asset Core, which is like AI-driven asset management, and they have a lot of different AI-related exposure and AI-related stocks that could potentially pay off in a major way. And again, the market is looking at the company, and they're saying that this is a company that's dying, while the company is implementing AI and it's leading AI in a major way. But I believe the company Constellation and Topicus and even Lumine, they have two different competitive advantages against AI that a lot of other software companies don't have. The first one is the cost of the service as a percentage of the overall IT budget of most companies. So for Topicus and Lumine and Constellation, the average cost for the companies to pay them, it's like 0.1% of the revenues. So let's say you're a school that has a Topicus software, which is big in schools, or you're a government, local government, and you have a Topicus or Constellation software. It makes up about 0.1% of your revenues. Now, if it only makes up 0.1% of revenues, which sometimes it's below 0.1% of revenues, does it make sense to you to go vibe code your own software, create it, maintain it, and deal with some regulations, deal with some headache just to save 0.1% of your revenues? In most cases, it doesn't make any sense. And this is why Jensen Huang said, would you rather use a tool or create a tool? would you use a screwdriver or create a new screwdriver? And he's been critical of the whole software sell-off because a lot of those companies have mission-critical software and it costs very little relative to the company's revenues. So unless you're Google and you have an IT staff and you could do it, doesn't you're just sitting around doing nothing, they can create it. But if you're a smaller business or if you're a government or you're a school, you're most likely not gonna go through the hurdle of creating your own software to save 0.1% of your revenues. So the cost advantage is a big one that a lot of people are not focused on. But the second one is mainly the regulatory effects around AI, mainly outside the United States. And here I'm going to talk about Topicus because Topicus is mostly in Europe. Europe has a lot of regulations on AI that are not present in the United States. And those regulations, they give companies like Topicus some kind of a local monopoly in a lot of those different markets because those kind of highly regulated areas, they can't use ChatGPT or Gemini or Claude to make their own software. They have to use something based in Europe and it has to apply certain regulations and certain languages. And I'm going to talk about this, but it's completely different than United States software. But again, the market is selling them off like all of them are pretty much the same. And I think the best way to measure AI disruption is to ask AI itself. And AI itself would tell you that Topicus revenues, around 91% of the revenues, in fact, is low risk for AI. And they gave it an AI risk score of 1.7 out of 10, which was actually lower than Adobe, lower than CRM, and even lower than ServiceNow. Now, in this example, I'm going to use a very recent acquisition of Topicus called CPAL. And CPAL is mainly a government software that they acquired in Europe. It was last year in 2025. And this is one of their largest acquisitions that they have done recently. And here it tells you why AI can't touch CPAL. And this is again an example from many of the businesses that they have. Now, CPAL is a sole source provider for hundreds of Belgian municipalities. Replacing it requires the Belgian procurement law compliance, which is 6 to 24 months tender process. If you even want to replace this software, you want to compete with them, you need to put in a tender kind of process, which takes 6 to 24 months just to even get your foot in the door. I mean, that's, again, not just you could vibe code the software and then you get rid of it or you get more competition. Those are like local monopolies. That's not easy for any kind of company to disrupt them. But then they serve the development of something called smart municipalities, which is a 10-year plus Belgian policy agenda that actually requires CPAL's existing platform as the integration backbone. So they're actually requiring those kind of local governments to use CPAL. So you can't just create another software while you're sitting at home and say, I'm going to go compete with CPAL. It doesn't work this way. And it doesn't work this way for many of the businesses that Constellation Software, Topicus, Lumine, and even other companies own. But no one wants to dig deep in them. They just look at, oh, software company, sell the stock, Just like now they're selling private credit, while, for example, BlackRock has like 4% of their book in private credit. But the stock's going down, because it's private credit, It's just a lazy way to approach it. And that's really what's creating a lot of opportunities in this market. So there's a lot of different moats within those companies. And I would say the biggest one, again, is mainly the government-related moat. There's a language moat, which, each one has different language. I don't really believe it's a moat. But again, I think the government moat is a big one, where 38% of Topicus revenue comes from the government. But I would also like to comment on some of the AI regulations in Europe and even in Asia, but the big one is in Europe. And this is what it says. It says, unlike the United States, EU AI regulations explicitly classifies government, healthcare, and financial as AI high risk. So they're very high risk, requiring conformity assessments, human oversight mandates, and CE marking. This is a barrier that protects incumbents like Topicus from being disrupted by lightly regulated AI tools for at least 5 to 10 years. So those are high risk areas. You can't vibe code them. You can't use a software company maybe from the United States, because you would be selling critical data for healthcare patients, for insurance patients, for even local kind of things like local schools that depend on certain data. You don't want to use a foreign AI, or you don't want to just use some kind of a app that just to save a little bit of money that the school is not paying for, the government is paying for, with record budget deficits and debt and all these kind of things. So this is another mode again that differentiate those companies from something like, I don't know, CRM or any kind of other stock. But then if you look at the stock, it just follows IGV, which again to me is very, very funny. Now the biggest problem for Constellation Software is the size. And this is a problem that Berkshire Hathaway is facing because their size is large. They're sitting on like 370 billion in cash, and they just can't acquire small companies anymore to move the needle. They need big acquisitions. And it's the same thing with Constellation Software. The pipeline is getting smaller, and this is why the new CEO has decided to develop a new approach, which is mainly to deploy larger amount of capital in what they call a permanent engagement minority shareholder, or PEMS. And they consulted with Mark Leonard, the founder, for that. Now, PEMS is whenever they acquire a smaller stake in a public software companies and they try to change it around. So they try to have some voting power, some influence. They want to influence the company, maybe restrict some incentives and just make the culture better in general. And that could help them not just from price appreciation, but also potentially dividends that could be paid to the company. But they can also somehow record it on their own accounting, I believe, once they own more than 15% of a specific company. So normally they acquire private companies, they have full control. Now they want to deploy some capital into public companies, and they said this is the logic, which is straightforward. Permanent means we're long-term holders, not traders. We'll work to ensure these companies endure as institutions, and they want to help them out. And Topicus recently did that with ACP as SECO. They acquired a piece of this public company, which was unusual for the Constellation Software family. They acquired it for like 85 PLN in February of last year. And now it's up like 98% for them. And they're already changing the CEO and aligning incentives and the culture, and they're already influencing the company. So this is what those companies do. And they're trying to do their best to expand the pipeline. Now, the final comment I want to make on AI is that, again, there's still uncertainty. I'm not saying that those companies cannot be disrupted. I'm not saying that certain businesses will not be disrupted. But there's also another side of the story, which is that if AI makes coding useless, for example, like Jensen Huang is saying, don't learn how to code, don't even code anymore, because the AI will do the coding. Now, if that's true, and AI will make developing software more efficient, Constellation's largest expense is its staff. So out of 9.7 billion, $6 billion is spent on staffing expense. Now, if AI makes things more efficient, don't you think it's going to make this company more efficient? And it's going to help them improve their margins in general? So if maybe another competitor enters with a lower price, maybe Constellation will be able to match the price while maintaining margins because they saved it on AI. So this is another twist that the market is not paying attention to. The market is only paying attention to how AI is going to kill Constellation, but it's not paying attention of how AI could potentially make the company even more efficient. And if Constellation can prove that, for example, they can grow revenues much faster than staff expenses due to AI, and they can do it over a few quarters, maybe the company or the market will start to price it like what happened with Google, where Google went from an AI loser to an AI winner. And maybe the same thing could potentially happen to Constellation Software. So this is another angle that, again, a lot of people are not thinking about. Now, if we look at the valuation of Constellation, it's trading at 13 times cash flow. I mean, if you told me 5 years ago that Constellation is trying to trade at 13 times, I'm like, you're dreaming, man. There's just no way, because the stock never got cheap. It traded 20, 25, 30, 35 times for many, many years. And that was the stock that never goes down. Well, now it's trading at 13 times price to free cash flow. This is really, I mean, I just can't believe it. And the company is still expecting to grow free cash flow 14%, 16%. It's going to decelerate, of course. It's not going to grow 20, 25% forever as the company is becoming larger. But it's still, it's still not bad at all. And I think the stock is undervalued below one time price to free cash flow growth. And you have the best culture you could have, no stock-based compensation, more AI resilient businesses than many other companies that don't have mission critical software. So this is my thoughts on Constellation. I believe the stock's undervalued, and I believe it's misunderstood by the market where the algorithms are doing the trading and they're selling those stocks with the IGV ETF, while a lot of those software stocks are actually great and they're gonna survive, and many of them are not gonna survive. And that kind of reminds me of back in 1999 to 2000 when the internet stocks were becoming popular and retail stocks like Dollar General, Dollar Tree, Dollarama in Canada, they sold off like never before because the market was saying that no one will shop in retail anymore. And the market was right, but those stocks went up like thousands of percent from 2000 to 2025, and they're still going up. Dollar Tree is still going up. Dollarama is still making new highs. The gas station stocks are still making new highs. So the market goes into such phases. I believe that's another phase, and that's my opinion on Constellation. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.